So this is GBP USD, and today I'm going to be showing you a simple entry model which you can apply in the London session, the ICT London kill zone, pretty much every day. Now, I'm not saying it's going to win every single day. I'm not even saying that it's the highest probability to trade this model every single day, but I'm going to emphasize it in this video, what the model is, what the time windows are, POI selection, all of these things, so that you can actually go and have something to backtest and put on FX replay and then collect data, look at what winners produce, what losers produce, everything. But today I'm going to give you a real life example of how the entry model works, what things to look for, the criteria to look for, and how you can start trading this model. So if we start with this, we have GBP USD right here. Now what I like to do is actually forget the 4 hour. I like to just go on daily and see where we are first. And it looks pretty bearish, okay? And that is why the daily bias is actually bearish, but this entry model still produced. And this is what I mean. You can actually trade this without a daily bias. If you want a simple day trading strategy, this is very, very good. So we drop down to the hour now. I'm looking for POIs, okay? POIs stands for points of interest. Now, what do points of interest do and what are they? You might be asking. Well, there's specific zones that we want to trade off. This could be supply zones, demand zones, fair value gaps, imbalances, things like that. So I want to see here, what are we looking for? So the day I'm actually talking about is this date right here, Friday the 11th of October. So the immediate POI I see is this huge demand zone right there, okay? This is what I see. And why is the demand zone strong, you might be asking? Well, this demand zone did something. It caused a break of structure. We had a swing high there. This demand zone was so strong that it went and broke a swing high with a body. And there's some imbalances here as well, okay? On the 1 hour, yeah, you can even, refine this if you want, okay? So we have this, plus we have an area of liquidity resting right below. So now we have liquidity and we have demand zone right there, okay? This is your POI selection. This is what you want to do every time you get on. You want to find POIs that did something, an imbalance or a supply demand zone that caused a break of structure on the high time frames, because if you look on 5 minute 15, it's pretty choppy and pretty much every zone can cause a break of structure. So I like to literally just look at the 45 minute to an hour to see my POIs and to identify them. So now that we have swept this liquidity right here, now we can drop down to the 1 minute or the 5 minute. Now, if we go to the 5 minute, then you can see, yeah, there would have been a very clean entry. So now we get into time zones. What time zone are you going to be looking for? Well, we got 7 to 10. This is UK time, as you can see below here. So this is London time. 7 to 10 is the kill zone you are going to be looking for. Now that means that within this timing, within this 7 to 10, that is when you're going to be looking for your entries. So anything below here, all of this stuff is, we don't want that. That's irrelevant. So knowing that, what do we mark out next? We mark out 2 points in price. We mark out the Asian high and we mark out the Asian low at 6 a.m. So if I'm bullish or if I'm just using a non-daily bias sort of method, I'm going to be looking for the the Asian low to be swept at 7 a.m. or after. And as you can see, after we did get that sweep, we know there's liquidity residing below here. So we're going to wait for that liquidity to be swept right there. So what have we had so far? Asian session, okay, cool. Asian low, swept, okay, cool. Now we're going to be looking for that simple entry model, which is an ICT 2022 mentorship. On the 5 minute, it's very, very simple. We have low, high, a low, a high, which gets broken right there. And this is a very good tip as well, which you should apply. If there's an imbalance, it's a way better trade. If there's no imbalance, don't take the trade. In this leg up, if there are no imbalances, don't take that trade. Okay, now there are a couple of ways of entering this. Entry number one, just make this red and green. Entry number one is to enter at the start of the fair value gap right there. Now you can put your stop loss in 2 places, either on the second candle, which gives you like a 5 pip stop loss, or to be safe, you could put it below the first candle for 8 pips, okay? Then you can target either Asian high for a 2.2, or you could do a standard deviation from the low to the high, and you can target pretty much the 2 or the minus 2.5 standard deviation, like that. And if you just don't want to target the 2, you can look at pretty much areas around this 2 area. So if we look here around to the left, we have this area of liquidity matching the 2 standard deviation. So if I just extend this, that could be your target, okay? You don't have to literally put it at the 2. You can make this your target. So that is another way. So this is the entry model in a nutshell. You have your Asian session, which you've marked out already. You've had your entry model on the 5 minute or the 1 minute, which we have clearly as well. You have a imbalance entry, or something I like to do is an EQ entry. Basically just enter at the 50%, which is right there, okay? And the stops below there, so 9 pips maybe. And then, yeah, you could target Asian high, or you can target the 2 standard deviation. Now, this is where your backtesting comes to play. This is where you're going to see the different variations of, is EQ entry better? Is it imbalance entry better? Is Asian high target better? Is -2 standard deviation better? This is where everything comes into play, okay? And that's for you to decide. But this is the entry model in a nutshell, okay? 5 minute break of structure. The model is literally this. Okay, this is what you're going to be entering off. Swing low being broken with a body ideally, and then EQ entry, and then to the upside. That is the entry model that I want to basically emphasize. And this is something you can test, okay? It's not going to work every time, but it's going to have a 55 to 60% win rate if you actually encounter daily bias as well. But definitely you'll have a 50% win rate if you just look for Asian sweep and then a clear entry model, okay? Then now there's other things to consider, such as news and everything. If you want me to make a video about that, let me know in the comments below about, you know, high probability conditions that I found myself. If you want to know that, let me know in the comments below, and also like the video, just so I know that, you know, this is something you guys actually want. Now, if you want to learn about daily bias, exact method of how I, you know, calculate my daily bias, how I view the daily bias, and come to a conclusion of what the daily bias is going to be on every specific day, then click this video right here somewhere on the screen. And that's pretty much it. So happy trading, stay safe, hope you got a lot of value from this video, and I will see you next week on Saturday.